Hello, traders, especially the Saturday night BGS crew. This is Dollar Will. Over the past week, I've had two people ask me, do I trade the US dollar versus the Japanese yen? My answer is no. Do I watch the chart of that pair? I peek at it sometimes, but I don't follow it regularly. I don't really have a need to. I don't have anything against it, but like I said, I don't have a need to. I trade the U.S. dollar versus the Swiss franc, and I look at that and measure that against gold versus the dollar, and then I compare the U.S. dollar to the Swiss franc to oil, and that keeps me in the sphere that I want to stay in, which is trading energy and metals. So that would be trading oil, uh, coal, natural gas, and on the metal side, copper, gold, silver, that kind of thing, that kind of stuff. But the US dollar Japanese yen, it has a positive correlation. I'm bringing up a compare sign here. What we see here is this is a monthly chart we're looking at, and the red line is the dollar versus the Swiss franc. The candlestick, of course, that's the US dollar versus the yen. You'll see that as the dollar declined, so did the yen. I'm going to try to sync these up a little better. Okay. You see that's pretty close. I basically took a common peak, put it at the edge, and that brought them closer together. Except for this little part right here, this little period right here, they went out of correlation. But for the most part, since however long, I believe the correlation may have been longer than the data shows, but this chart again goes back to like 1975, and it shows mostly a positive correlation. Now and you see where the dollar bottomed in generally around 2011, and the yen versus the dollar versus the yen bottomed as well. Now I'm of the opinion that the US dollar is going higher. Let me get rid of this. I'm going to focus on. Yeah. And with that being the case, I also believe that the dollar yen is going higher. One reason is that historical correlation. Another reason is the behavior I see right at this moment. I have a trend line drawn, which is functioning as support, and the price is staying above that line. And we're looking at again at a monthly chart. We see a little green candlestick starting to form right here. So as long as that support is holding, there's no reason to believe that the correlation with the dollar franc is going to end, and that the yen will not continue on its path to go even higher. What we have here is a 50, just a little bit more than the 50% retrace, and that's nothing. You know, it met the requirement. In Elliott wave theory, movements against the trend, the main trend was from 75 going down, and the downward trend has 5 waves. The counter trend has an ABC pattern. If you want to call it a zigzag, that's fine. But that middle section, like this would be the A, the middle section has about a 51% retrace, and that's what we have here, a little more than a 51% retrace. And then the price is supposed to continue higher. I believe that the US dollar is at a similar point in time where it has completed the B wave, and it's in the C wave. It's just starting the C wave, whereas the yen here started its C wave here. But we'll keep an eye on it to see if it crashes through. Let's see. There are other reasons why I believe we're going higher. Going to my trusty oscillators here. You know I'm going to get the stochastic. That's one of my most favorite oscillators. And I'm going to introduce a little MACD. Let's start with the stochastic. The stochastic oscillator measures momentum. And everything above 80 is overbought. Meaning that it is, as it sounds, too much buying, or the buying is at historically high levels, or within a range that's considered high. Let me just put it that way. I don't want to say historically high. It's the amount of buying activity is at the upper end of its range over history. Okay. And so above 80 on this scale, which would be outside this purple band, north of the purple band is overbought. That means too much buying, too much optimism. South of the purple line is oversold, too much pessimism, weakness. And I can pretty much do a wave count starting from where the oscillator is oversold, going up to where it's overbought. So that would be A, B, C. And this C would still be in progress because we never reached overbought. So A, B, C. And within each of these fractals, A, B, C, there's another A, B, C. So, so in this A, you would have A, B, C. And I can't really see the ABC at this scale. If I went down to a daily or 4 hour, I probably would see it. And here we have A, B, C in progress. So that's what I believe will happen. We will see if what I think will happen will actually happen. At the bottom we have we call it a MACD. MACD actually stands for Moving Average Convergent Divergence. Let's see if I can kind of show why they call it that. Well, I guess we're not used to seeing it this way, but we have a little bit of a diversion. The price of the MACD is moving as the price of the yen is moving down. The MACD, at least on this top line, is holding, going sideways, but we have a triangle of rising support. So the MACD will make either converge with the price, meaning move in the same direction as the price, or diverge, meaning go opposite of the price. So this opposite or strengthening MACD, while the price was falling, was telling us that at some point it was going to reverse. So of course it is. But the thing about the MACD, why I don't really prefer it over the stochastic, is this convergence or divergence and convergence. These states last for many, many, many years, decades even. Okay, so you can see strength building or weakening, but it doesn't mean that the reversal is happening right now. So it's, it kind of gives you a good indication of trend, but it doesn't give you a signal necessarily to buy right now. And in most cases it doesn't. But a suspicious thing here happened on the MACD, and that is when we were Let's see, one other thing off the MACD. When the pair is in the negative, which is when you have a center line here. Imagine the center line. You got zero on the scale. When the pair is below the center line in the negative numbers, these are negative numbers here, the price falls. It's not enough strength to keep the price going north. When the pair is above the center line, that's strength. And you'll see, let's see, right here you can see, let me come here. So you can see it up here on the price. Right as we cross positive, the price really took off. Okay? So I'm gonna come over here. This green part right here, where we took off higher, you'll see I'm now moving the MACD to where it got positive. You see it really took off after that. And then it crossed negative. Now, what gets our attention on the MACD is when we hit a bottom in the price and it's near the center line. And we're about to take off again. So that's telling us that we're still in this wave, this C wave, and we're on the positive side or closer or almost positive, near positive at the center line. So there will be tremendous force taking this thing higher if it does what I think it will do. Now, the thing about the MACD is you're supposed to look at this fast line here, this blue line, and see if it's above or below the slow line. Technically, this is weakness, but I'm going to chalk this up to an error in me not, in this MACD not really being tuned to the price. Maybe I'm wrong, maybe I'm right, time will tell. And I'm just showing you the hard rule, and we'll see how it goes. If I'm wrong, I'll pay for it. I'm going to pay, I'm going to suffer, I'm going to lose money. But we'll see how it goes. So I'm watching this candlestick here, which is telling me we're going higher. I have this support that we're honoring, which is telling me we're going higher. Then I have this one aberrant thing down here on the MACD. So I don't think I'm going to overrule all of the other data to just to be in accord with a crossover on the MACD. So we'll see how it goes. Now, we have the low here, and like I said, we have an A, B, and a C. Well, the MACD is also showing us A, B, C. All right. Well, that's all I have for the U.S. dollar versus the yen. The next chart soon. I'm going to revisit the dollar because the dollar still hasn't broken out of that channel. You really need to keep an eye on this kind of stuff with the dollar and just stay tuned with it because it's going to give you an indication of what's about to happen with gold, oil, and those cryptocurrencies that are paired with the dollar. This is the time in your trading when you need to be taking notes, looking to see, A, will the dollar break out? If it does break out, which one of those cryptocurrencies are going to trade in the direction of the US dollar, meaning that they have a positive correlation with the dollar, and which cryptos have a negative correlation with the dollar, meaning they trade in the opposite direction of the dollar. You want to begin to take note of these things, write them in your trading notebook so that you'll be able to make forecasts on which currencies, cryptos, are about to reverse. It should have, well, it got my attention when I saw the cryptocurrencies were all paired, well, not all, but a tremendous amount of them were paired with the dollar. That means that it's going to conform to the way other instruments work in the markets. So there's one world, and all of these financial instruments are in that universe. There are no lone wolves. the cryptocurrencies are going to conform to, or going to be affected by the movement of money in the global markets. People are going to buy and sell cryptos based on how they feel about the dollar and oil and other things. These correlations are going to develop. And with cryptocurrencies being so new and young, um, this is the time to learn what those correlations are with Bitcoin and Ripple and etc. And that'll give you a heads up on when the market or when those instruments are about to change direction. So thank you, and stay tuned for the next video. Like the video, subscribe the video, share the video, tell your friends about the video. I'm trying to get my numbers up. I need the encouragement so I can do some live hangouts and bring you guys even more information. But I need to know that it's of value to you before I take my attention even further off of actual trading. All right. Thank you.